What's up, YouTube? Welcome back. So, we have a lot to break down tonight. I haven't made the title yet. I'm clicking record first. But we're going to talk about AMC. We're going to talk about the Ape Nation, what they're tapping into, market makers, hedge funds. So before we get into any of this, I know you guys have learned, and I hate to generalize, but we know this AMC movement, it's brought on a lot of, we'll say amateurs, very amateur. I don't want to say stupid because you don't know what you don't know. Your comments very much show it off. And you guys do say FUD, and it reminds me of a bunch of just baby birds just squawking and yapping the whole time until little mommy bird chews up a worm and puts it in your mouth for you to be quiet. But to be very clear, this video is going to be non-directional. I made a video yesterday saying it's not going to go to 100 grand and talk about getting in some of your guys' feelers, plus AMC's red today. You know, I'm not going to troll anybody, but this video is just non-directional. I'm going to break down what a gamma squeeze actually is. On this channel, I talk about the mechanics, right? I don't have any feelings. I don't care about your feelings. And if you want to be in this market, probably should get rid of those. Those hedge funds you guys are going against, they don't have any feelings either. It's numbers. There's the mechanics. There's what makes things go up. There's what makes things go down, which we are going to get in. That's what the Ape Nation, I think, is tapping into. So that's the second half of this video. So first part's going to be the gamma squeeze. I have to explain options. Whether you're trading shares or not, you guys need to know this. You don't have to ever touch an options contract, but you're in something largely talked about with a gamma squeeze. Gamma squeezes happen quite a bit. It's something I break down and talk about. You guys don't know what I'm call it a gamma squeeze every Sunday. First and foremost, tomorrow's video I'm about to record right after this. Someone asked me a question in the comments. It's how do you trade with kids? And what I want to start doing, when you guys have questions like that, doesn't have to even be chart related. Toss those questions down below in the comments. Whether it's about this video, just a question in general. Trading's not easy. Now, I've been doing it for almost 10 years. So, can I do it? Yes. Are you going to be a pro trader watching 30 minutes of my videos? No. There are people, I have a lot of awesome traders in my mentorship. Now, they've watched every one of my videos. And yeah, everyone grows at their own pace. There's a learning curve. You have to adapt. There is a whole mindset to it, the psychology behind it. But is it physically easy? Yeah, you can click buy, you click sell. Some apps show you confetti, right? Easier said than done as far as if you guys want to, buy low and sell high. That's a totally different story. So, sometimes you can hop on here and maybe I talk about it and it is easy. It's consistent for me, and I don't get emotional about red or green, or my winners are just bigger than my losers. So ask those questions, dig that out of me. How can I help you guys get to that point? The only thing you've been doing for 10 years is walking, left foot in front of the right foot in front of the left. Sometimes you trip, but for the most part, you know how to walk from point A to point B. So anyway, let's get into it because we have some stuff to break down. AMC today, I guess it's going to be kind of directional. Let's look at the daily, because both you guys are probably going to get this notification now. We are still inside this day. Now, we talked about this trend line yesterday. I'm in AMC. I actually still am in AMC. My risk is in my capital, so I'm in it. I'd salvage it if it broke that. Sorry, Diamond Hand Crew. I'm in it for the trade. I have to do this to make money. Love it. Love what's going on. I can't wait to explain the back half, what the whole Ape Nation's doing. We talked about yesterday that, yeah, there's this trend up, but we're still inside here. So if it breaks this trend line, you can have the Picasso of charts. You're the only person that sees it. Don't sell yourself a position. We're still nothing, right? We sold off, Friday. We gapped up, thought it was going to be good, sold right back off. Here we are again. But the story still stands. What this trend line shows is higher lows. We're still making a higher low. We're still kind of overall trending up. I would have been a little more nervous if we broke this. That's going to be our last low. We're talking here. We're talking here. Getting above that. So tomorrow is green. We were just a few pennies away from to where you can't short. Whole video for another time. Once it reaches that 10% mark, it becomes harder to short. And I was actually interested to see if we tag that mark, just how hard is it to short, because there's going to be some manipulation or some back-end moves. It might be just that, not happening. Another video for another time. So let's see. More immediately, yeah, if it does break that 51, we'll probably do for just a little bit more red. So gamma squeezes. Everyone loves to talk about it. I've heard it happens on 2:30, 2:45. I've heard it happens on Friday. Everyone's looking at the options contracts, and that's kind of where it's derived from. So I'm going to pull up the options chain here. Options. Here we go. This is your options chain. One contract is an option to buy 100 shares. Now, I'm going to explain deltas to you because there's a good chance the person who explained delta to you told you this one thing. If AMC goes up $1, then your contract goes up that much. And that's really sweet and all, because that's true. That is one definition in one way, the tip of the iceberg. A billion other ways to use delta and what it tells you. So to understand this gamma squeeze, you have to understand deltas and what's going on. And first of all, a market maker. A market maker is neutral, right? They're not there to do anything. If it is you versus the hedge funds, and you guys were a football team, right? So retail versus hedge funds, the market maker would be the football field you guys are playing on. They're allowing you a smooth platform to exchange blows back and forth, and that's all they're there to do. They're not there to do anything else other than make that market and make it happen. Okay, so when you're talking about be careful with the market makers got me today. Like, nah, they didn't. Well. Unless it's the case of a gamma squeeze. So, deltas. Deltas are rated per share basis. Not only is it how much that contract will move, it's how many shares you actually control. So, by buying this $55 call, right now, the expiration is June 25th, you're essentially controlling 57 shares. Now, when you see right at the money, not only is it how many shares you control, it's your percentage of that expiring at the money. Not making money, at the money. 57% chance. Right now, the market makers are saying about a 57% chance this will expire at $55. That's it. Now, this is also a little bit. Typically, when you see so here's the shaded part in the money, unshaded part out of the money. Typically, this right here at the money is about right here, the 50, and it's because it's a 50-50 chance. We're going to go up or we're going to go down. Now, what deltas are and how everything's are rated. When you hear them say delta neutral, so again, rated per share basis. You tell me, hey Don, I have 100 hard deltas in AMC. There's hard deltas and soft deltas. Hard deltas are the actual shares. Soft deltas are options contracts. You tell me you have 100 deltas. I'm gonna say hard or soft. Jokes aside, what do you got? You tell me you have 100 hard deltas, I know it's 100 shares. Tell me you have 100 soft, you could have a couple of these, you could have 4 of these, you could have 1 of these. Those are soft deltas. They're on an options contract, so they can change. They will move when this moves. Which leads us to the gamma squeeze and the whole hedging part. So on Sundays, if I don't forget, I hate when I do, but we talk about the market makers. We talk about where their implied risk is at. So we look over here. Where are we at? $14. Sorry, that looked weird not having a decimal. So right now we're placing a $14 move on AMC. So let's just grab it from right here. From now to the rest of the week, we closed right here. We're going to go $14. Oh, man. When's this expire? 25th? Boom, right, nailed it. All right, here we go. We're going to go $14 here. Close enough. Look at that. That should pretty much lay the parameters out for where that gamma squeeze is going to happen. Now, the market makers are placing the risk right here. So you've bought a bunch of these contracts. Do I have my magic pen? Let me really draw this out for you guys. 2 seconds. There we go. All right, let's grab our little pen. You know, let's say you bought the 55. You're right here. Now, when you buy an options contract, you are positive delta. If you sell that options contract, you should figure this out, you are negative delta. If I were to sell you that call, hey, I don't think it, I don't think, what are we in, AMC? AMC is going to be 55 bucks. I think we're going to sell off. So I sell you this call. I'm going to collect your 650 bucks, and I will be negative 57 deltas. You can look at your whole portfolio and just tell me the deltas, and I'll know whether you are net bullish, bearish, where it's at. Regardless of your hedges, I'll know whether you're a bullish or a bearish standing just from the deltas. So a market maker sold you that contract. They are now negative 57. A market maker's job is to remain neutral, unbiased. They need to be at a neutral delta. So what they will do is they will go buy shares to hedge this. So you're essentially forcing them to buy shares. Now, this is going to race to 1 or 0. So you're going to get a 1-to-1 ratio. Again, 100 shares, that contract is worth 100 shares. You're placing a contract to buy 100 shares. So that is going to go up to here, race up to 1. Let's get that out of the way. Or one right down here. Once it expires, 0. These are junk. These don't mean anything. While we're on the deltas, you load up on these because they're cheap. 5% chance we hit that. Some of you guys really love that. You're not causing anything right here. The market maker's not hedging for that. As simple as it is, where you're going to buy 57, put them in a position to be negative 57 deltas. They'll need to buy those shares. So they'll be hard deltas, but they'll be neutral delta. A neutral delta. You're positive, they are 0. They are negative 57 soft deltas, positive 57 hard deltas. They remain neutral. Now, the reason this is called, the reason it's an algorithm, not just basic add and subtract, is because there's people going in and out. Is this going to go up or down? Should we buy 100 shares? Should we buy 100? Do we need 100? Should we wait for 2 contracts to go? Do we fudge it a little bit? There's a whole plethora of things that go into it. And right now they take all the data, and that's how they get this $14 number. With all the contracts being bought, where is our risk? We are allowed tolerances. That's that $14 move inside here. We crank it out to above here. Now all of a sudden they are not at a neutral delta. Remember, your deltas are soft. They are changing. It is going up. Maybe you're flooding into calls. You're buying more calls. Now these $70 calls are at the money. These $70 calls right now, they're 29 deltas. 29% chance we get there. Now, when we get to 70 bucks, they'll be at the 57, 60. They need to buy more shares. That's where, when you say option strike order flow, that's what's happening. As we push up, the second we breach this number, that's where I talk about now. Every Sunday, we talk about here on the Russell, the NASDAQ, the S&P. When we get above this, this is where volatility takes place. And right now, for this week, right here, that's where the magic's going to happen. That's where volatility is going to get nuts. And then same with down here. These are not support and resistance lines. They'll often look like that. They'll confuse you if you don't know what I'm explaining right now. And we talk about these lines. Let's just bring them up. I didn't draw them this week, but right here, that's where we get a little crazy. And I tell you guys, so here's the beginning of the week. We got it right back here. That's 2 standard deviations. GameStop did that one. It was like 5. This is 1 standard deviation. Now, the second we get out, I think, now it's because I've been trading for a while. These are my numbers just made up in my head. About an 80% chance that market maker is going to rein it back in. They got to get it inside their risk. That's where the games get played. But we'll go from, if it takes Monday, Tuesday, Wednesday to get to here, we'll go from here to here Thursday. That's where volatility is going to get crazy. That's what causes that gamma squeeze and pushes things up, and it becomes just that continuous loop. So we get back to AMC. What I drew out was a $14 move, 1 standard deviation. Go up another $14. That is 2 standard deviations. Almost nailed that one. So if you want to see things get crazy, it'll be in between here. Now, me personally, once we get up here, that's extra volatility. So that's where I personally start to, what I would be doing in this position is trailing my contracts, start to take profit. Because we don't know, if we run into the bell right here, man, that next question is it on like Donkey Kong? Are we lighting a fire and we're going for it? That's 1 standard deviation, 1, and then 2, and then 3. 68% chance we'll stay inside here. 95% chance we will stay inside here. and a 99% chance we stay inside that third standard deviation. As you guys can see, it's a $14 move, so it's just that the whole time. You guys are probably just hating that I'm even drawing this line down here. It does suck when I draw these lines out and they line right up with the zone. That's where it just gets awkward. 99% chance we stay inside here. People get struck by lightning all the time. That doesn't mean we have to. These are not, we have to stay inside here. It's where things get volatile. It's where things get crazy. Inside here, normal risk. It's the hedge funds. If they want to put out any FUD, they're playing that game. It's you guys talking about diamond hands. All of that is the children can just run around and play inside their little pin right here. Market makers will be at a neutral delta off of their algorithms based off that options data. When we get outside these levels, go from 1 to 2, volatility takes place. So the algorithms, again, there's a bunch to them. It's why, again, it's called an algorithm. Bunch of things, not just, well, they bought a call, so we got to buy the shares. Not exactly that simple, but that's how it takes place all the time. The second we get out of there, they got to get to that neutral delta. That's where the buying and selling takes place when we get outside these risk parameters. So again, it's not just, I got to buy this call. That's going to automatically make them do that. But that's how we get those squeezes. When we get up there and then all of a sudden FOMO, people start buying and buying. They do start buying. You got the YOLO crowd buying the cheap crap contracts. Now, these will end up on the Instagram of trading because someone YOLO'd their money, their savings account, into a $45 contract, 5 deltas. And yeah, we push to 70. We're at that 1 standard deviation. We hit that 2. We start climbing and we get crazy. So what's that, 84? What's that, 90? Why am I 98? Imagine pushing up to, where's it at? I don't even have one. Right inside here. It'd be backwards. Sorry. Option chain would be backwards. So if we were to go, what, 28 bucks? Puts us right. Look at that move. If AMC pushes up $25, here's how that, and then you can just look at the options chart here. You don't need the profit calculator or anything like that to see where it's going. AMC pushes up $25. It's going to go essentially $25 up. So, yeah, 25 right here. Your contract, almost percentage-wise, it's awesome. You went from 45 bucks to 70. You went from 5 deltas to 7. Market makers aren't worried about that. But it spools like a turbo, and that's where you get the gamma squeeze because all of a sudden these are like, we don't have to worry, are in your face, and it's time to do your job and get to that neutral delta, which buys shares, which, you know, again, more buyers pushes it up, more sellers pushes it down, more buyers pushes it up. And as these get closer to the money, let's say your parameters are right inside here. Here's your standard deviation, $14. 70, yeah, sorry, puts us right around here. We get outside here, now these need to be accounted for. These got to be hedged against. We're probably fine right here. Getting outside this 30 delta, now we got to start buying shares to account for these because these are no longer 20 anymore. They're 50, and that adds up quick, especially when we got 30,000 contracts. It's a lot of shares, a lot of share buying. And then these big numbers start to turn into even bigger numbers. So hopefully that clears things up. Right? That is your gamma squeeze. That's what causes it. Once you understand all that, that's what's going on real time. It's not AMC. It's not just GameStop. That is just how, that's the mechanics of the market and just the behind the scenes, what's happening. So let's talk about hedge funds for a little bit because they don't have any feelings. You know, you guys love to just take on this image that it's hedge funds versus you guys. And not that it's not, right? Their job is to make money. And let's be honest, retail is incredibly stupid, emotional, not good at making money. Look at Bitcoin, for instance. You guys were all about Bitcoin. No, I am too. I'm red, obviously. But just think back to when Bitcoin was right here. Now let's talk about Facebook. Let's talk about everybody and everybody talking about it. There are so many traders that when I go on Instagram, I know Bitcoin's had a green day because like it's been a while since I've shown my portfolio. I better show it off now because it's a green day. Ghost town. Those guys aren't showing anything right now, unless they got to be noble for the cause. Like, no, look, I'm still in it. See, but think about this. Think about this process. Think about people buying on. They heard about it on Facebook. The YouTubers, the gurus out there, all talking about it. You guys had no problem buying at 60,000. Yet right now down here, oh no, bear market. You guys don't want anything to do with it. That's where you'd be pissed if all of a sudden it's August and it's 70,000. I'm definitely not making that prediction, but I bet you guys wouldn't buy it till we're right about here. And then you're going to buy it at 60, go from 60 to 70, maybe ride it back down again. Market makers, I don't know why I keep saying that. Hedge funds, they have the ability to just do their job and make money. They don't have emotions. It makes things a little bit easier. Retail, you guys are an emotional mess. There's a reason why. I'm probably more successful at this than you are. I'm not emotional. Yeah, I take losses. You want another loss I just took? Like a joke. Roku. Yeah, that alert went off. I bought it. Went to the zone, grabbed it, dropped down, tagged me out. I'm out. Came back up and still went zone to zone. And then came back down again and said, just in case you missed it, Don. And then went for it. I took advantage of it today. But look at that move I got to take advantage of today. That was it. Let alone, I took a random loss to watch it turn around anyway. Call it paper hands, whatever you want. I had a structured trade, took it, and it was a loss. I'm not complaining. I don't care. I didn't get emotional. I didn't bag held. If I bag held, I would have made money, but that's not how the game works. Not in the long period. Not when you're taking 1,000 trades. It works one time, and then you'll mentally stick yourself to that. One other big factor about these hedge funds, and why I like the Ape Nation, well, at least that talk, because that is 1,000% my trading style. Now I ignore all the noise. I don't care about news. I don't. First of all, you guys are all calling it FUD now. Go watch my older videos. I call news BS. I don't watch news. It's not what they're telling you. It's what they're selling you. I have no interest in hearing that. I don't care. These candles right here tell me everything I need to know. It went up because there's more buyers. Period. Right? I'm not a fortune teller. That's why you don't see me say, hey, this is a $1,200 stock. It's easy to say AMC is not going to 100,000 because reality. Sorry, guys. And again, I don't mean to offend you. I've just been doing this a while. It's not going to 100,000. If it does, I'll say I'm wrong. Big deal. It's not often that I'm wrong, though. Anyway, more buyers it goes up, more sellers it goes down. No matter what. Now, all the other noise out there is how does it go up and how does it go down? How can we control the narrative? What kind of story can we push? What algorithms are doing what? Who's trying to manipulate anything? Manipulation's easy. You got millions. You're trading with millions. What's it to slide who knows how much money in a mayonnaise jar to a reporter and say, write this? Algorithms are going to grab the headlines and make trades. Now that you can't change. Period. You can get sucked into the news. You can jump down that rabbit hole. News for me is a conversation piece. I'm like, what's the story now? I don't really care. Love Tesla's story, but if it keeps going down, you're out. Or I go short. No problem at all. This to me is 3 or 4 letters. It's a vehicle to make money. And that's what these hedge funds are doing. But one thing they get to do, and one very, very distinct difference, they have money. Now, you guys buying your 10 shares of AMC, talking about how you're going to stick it to the man, you're a fly talking. No one can hear you. You ever heard of fly talk? I never have. Right? That's how little you are. But just like that saying, apes together strong. What did you guys just form? Money, capital. If you guys ever just got together and just got organized, you would be actually messing with these hedge fund guys. When you have the money, because money controls everything, money can move the markets. Bigger guys can't just go out and click a market buy order. They have to do that's why they have share accumulation. That's why these zones work, because they are only buying at this specific price that they have designated. They won't get that fill because they need to create that liquidity for you guys to get scared, sell it off, for them to buy it back up. That is the name of the game. How can I get this? How can I create enough fear to have everybody sell so I can create that liquidity and buy these shares? Right? That's how they do stop hunts. A hedge fund will take a significant amount, drop it. Now, when they do that stop hunt, they've either paid for your order flow and they know there's a whole bunch of stops, or you just know there's a support right here, so we'll just gap that thing right on it. We'll take a huge chunk, we'll drop it down. Everyone's stop's going to fill, which is even more sell side activity, which brings it down even further. You see this a lot with low float stuff because it's super easy. But they'll drop it down, everyone will panic sell, and then they'll buy it up. They'll get it cheap. Right in the midst of that panic, they're the ones buying it. They triggered the avalanche. You guys filled in that gap. They'll start buying it. That's why you see these little quick spikes to the downside. It's a stop hunt. They're doing just that. They created that panic. They dropped it. They got to buy it because they either saw that bigger move coming and they wanted to get in cheap. They wanted to shake things around a bit. Perks of having that much money. When you get that much money, you can do the same thing too. You're probably not jacking around though if you made that much. At that point, you probably are on your own island. So that is the one cool thing about the Ape Nation, what these guys are doing. If you guys, again, just got organized, rocking and rolling, you could just move things around. I gotta be careful how I word this next part, because if you were to all to conform to one person's channel, it would move probably that particular ticker if everybody got together and said, let's rock this. And that would, depending on who's the chief, who's the leader in that tribe, might be considered manipulation. But that's where that would lead. So retail's finally big enough that when they get together and gang up on something, that's what you guys are seeing. Now you guys are attacking. You guys really think you're attacking a hedge fund. That hedge fund, I would probably, it'd be silly for them not to be paying attention right now. I'm sure they are. They have algorithms inside Wall Street Bets. I mean, we see it all the time. Hey, this is the #1 ticker Wall Street Bets talked about. You think that's a secret between us? No, they know all of that information. Now they can lead you on, make you think you're doing something. They can move everything around. They can dangle that carrot in front of your face, and you're going to follow it like a little rabbit and just run till your little heart runs out. I don't know how you guys would get to that next spot, but I love that that's what's going on. So this should prove to all of you guys supply and demand. At its very basic, that's all this is. It's an online auction. The bid, the ask. Where's everybody buying? At the bid. Where's everybody wanting to sell? At the ask. That's it. Everybody gets together and hammers that. When all they do is buy and hold, there's nobody selling. There's fewer and fewer selling, which means that ask is just a fewer. If there's nobody at the 55.62 mark, then it goes to the next person. Everybody's got their price. Regardless whether you think everybody's diamond handing or not, everybody's got their price. So let's say there's 12 people looking to sell right here. There is nobody looking to sell until $70. Once that order fills, those shares are filled, that will jump to 70. That is your next seller. Your battle right now is who's selling it right here. There's plenty of traders, a million things getting in and out. I think that's going to be it. That should wrap it up. Hopefully I explained all of that pretty clear for you guys now. Gamma squeezes, yes. Questions, let me know down below. Really, not even AMC or Ape Nation. Any question that can help you get past the learning curve that I can answer with or without a chart. Yeah, let me know where you guys are at on this. Did that clear it up? At least let me know down below. Did that clear it up? Are you more familiar with what a gamma squeeze is now and kind of how options work? How many ways you can use deltas in determining where everything's going? And how are you guys going to get together on the Wall Street Bets forum and make something happen? Because that'd be rocking. If all retail, it would just be, what's a good analogy? Because Wall Street Bets is all over the place. You guys know it. You guys don't have the best track record either. It's because you guys are all over the place. If everybody just got together, like what are the little Power Rangers? They all got together, made the giant robot. How many other things do that? If you guys just all conformed and did that, you'd be rocking with these hedge funds. You would have the same money they have. You could pull the same tricks they do. And you call that manipulation? It's just a tool in their belt. We'd just be leveling the playing field. It's not illegal. It's not illegal to sell shares and watch you guys panic. It's not illegal to just hammer into AMC and say, I think it's worth $100,000, and I'm going to set my sell at $100,000. Ball's in your court. Nothing illegal about it. There's a loser in every trade. Something to always remember. You need to have your risk. You should know your risk before you get into a trade, first and foremost. But I'll wrap that up here. Let me know everything down below. I'll see you guys in tomorrow's video.